What's going on, ladies and gentlemen? Welcome back to the channel for another weekly update. I hope everybody's having a lovely day, and I hope everybody had a lovely week. This week was quite volatile. All right, longs really did get thrown a line there. I hope people are taking advantage of it. If you weren't out of long positions, there you go. All right, if you weren't establishing your short positions, well, here you go too. All right, I was in the second boat there. I made the mistake of exiting the vast majority of my position here, and I'm kind of glad I did now that we are finally seeing technicals play out. I knew, hey, guys, it is extremely risky to take a short position down here. I was trying to tell you guys, hey, even though, hey, you could have pulled the thing like this where you just, absolutely died after consolidating for a week or two straight. It was highly probable that you ended up getting that counter trend moved. You fell 12% on NASDAQ, something like that. Holy sweet baby Jesus, 12.3%, and you just didn't even, you didn't get your counter trend move. You just literally did not, all right? You can see that demonstrated by the fibs, all right? And literally, we still have not made it to the 0.38 Fibonacci up there, which I made a joke and called it the green pocket. So I told you guys in the last video that I like putting on the golden pockets, which is right here, the 0.78 and 0.618. And I typically just I don't like having all these lines on my chart, so I'll just leave that up. So this one hit the golden pocket of this move down, this one hit the golden pocket of that move down, this one right here hit the golden pocket of that move down. So all in all, for the swings, golden pocket is sexy, all right? It works. But I made a joke and I called it the green pocket. Maybe we end up coming up here to the 0.5 to the 0.3 here, and we end up stalling out here, and this would be, it's not actually called the green pocket, but say that does happen. I'm just saying, guys, the minimum we should be seeing for a counter trend move is going to be that fib level right there. But again, all right, this is why I was fully open to hey, maybe you're not going to do that. And I told you guys I wasn't happy about it. I wasn't going to have my full short position. I was only going to have 1/3 of the short position. But this counter trend move right there, this was another example that just did not hit it, all right? And that's what I was saying, hey, there is the chance you just died. But again, TA was suggesting, and our big picture point of view was suggesting, that we would be getting the counter trend move. So I was not going to jump the gun. I knew my patience was being tested. And yeah, it ended up working out. I hope you guys had your patience end up working out. Yeah, all right. And actually, I just want to point out one of our biggest tells was over here, our boy Apple, guys. This bullish divergence that formed on our RSI here, that was one of our even before that, the fact that we came down and touched 30 on the RSI. This has literally just been a place during this bear market, at least, where you bounced, and then during the bull market, definitely where you bounce. You just don't stay down here. You come down and hit it for a day or two. Now I do see over here you had this back and forth that I do believe that was during the crash of 2018, whatever this was. Maybe it wasn't a crash, bear market, whatever you want to call this thing. You fell 40% in 2018. Wow. So this is, I don't know why I haven't been referencing this. This is kind of, I'm not going to say it's what we got going on here because the last 2 months, I wouldn't call that a bear market, but all in all, it's pretty much the same as what we had over here. Actually, it's worse than I haven't even been looking at that. That's crazy. Oh, that was on Apple. It's not on the actual indices. That is why. Okay, that's why I haven't been looking at it. That makes more sense. But either way, my point is Apple, it should not be staying down here, all right? So if we are going to come back down here, or we came back down, we're going to form a bullish divergence. That would give us the fuel needed to then have that larger counter trend move, which would then set up Apple to come back down, and maybe we come back up here to this 50 mark, maybe get rejected. This is a spot here on the RSI that around 50. That is just the middle line on the RSI, where the bulls and bears are fighting for control there. And then it would set us up to come back down and form that triple bullish divergence, or a quadruple bullish divergence. All right. Well, actually, no, that would still be the triple bullish divergence. You would form a deeper bullish divergence of what I'm getting at. And that would give us a tell for when to start looking for bottom. Now, we also have a bunch of other factors suggesting when we should be looking for bottom. And we'll probably touch on a bunch of those during this video. I'm going to do my best to make this a short video, but I'm going to tell you guys in advance, because I don't just want to sucker you guys. Hey, all right, this is probably going to be a longer video just because we have a lot to go over, all right? In the end of the video, we are going to be talking about what I'm going to be doing to play the Bitcoin bottom, which is going to be in this zone here. With all likelihood, it's going to be in this zone here. Now, if we see something that we've never seen before, it comes further back down here, all right, lower than that, yeah, that's that, all right? But with what the market is suggesting, or with what the indices are suggesting, and then that combined with Bitcoin, yeah, you got the perfect storm here to have Bitcoin bottom here, and that's going to align with the market's bottoming, where I think they're going to be bottoming. Now, they don't have to bottom here, but I just literally outline this gap fill and this support right here. All right. And there is a high probability this is the top of your COVID, March 2020. This is right where you crashed from. So there's a high chance that you're going to have a crap ton of buying pressure coming in over here. All right. I'm sure if you put on volume profile, you probably, actually, over here, you probably would see a lot of, like, not a lot of volume here. I don't know if you'd see a lot of volume here. I feel like you would get a reaction, though, if you came back down and hit this 338.25 level. So that's why I have those on my chart. That's where I think we're heading. All right, and we do have technical suggesting we are heading down there. All right, so with that being said, we're going to start off with the weekly time frame, then we're going to go to the daily time frame, then we're going to go to the 4 hour, then the 1 hour. All right, we have a lot of things telling us that we have a very likely scenario that's going to be playing out this week. And that's what I'm going to do my best to outline in this video. All right. There were some things I just put out the written update over on Webull and Facebook. There were some things in there that I just couldn't tell you guys in here. All right. I couldn't go into super detail on that without, writing a bunch more paragraphs. Especially I couldn't show you guys why I'm going to be putting more money into Riot than Mara. All right. That's the difference I'm making. I'm still going to be using Mara because Mara is 45% short, whereas Riot is not. I think Riot's like 20% short. But yeah, guys, which actually Mara, that could have changed the other day. Actually, we saw all the crypto miners running massively, so there was most likely a short squeeze. All right. But yeah, with that being said, let's start off with the weekly time frame. All right. So as you see right here, we do have a hangman candlestick on SPY that has formed right here. All right. People think it's a reversal candlestick. All right, I'm telling you right now on the patternsight.com, which is the website I use to put all of our targets on the board here. We had this target right here at 348.11. We already hit our rising wedge target number 1. And I only put the targets on the board if it's a confirmed breakout from a pattern that I know is going to be hit, because I'm not going to troll anybody out there, all right, with targets that aren't going to be hit. All right, because what if someone's trying to play? Now, again, not financial advice. I will have a disclaimer going up over the next few videos. We're gonna start doing that. I guess I will flash a disclaimer at the within the first 30 seconds of each video, I guess. Just to avoid anything. I got to really look into, like, hey, does that actually protect me? I don't know if that protects me, but all in all, I'm gonna be completely honest. My TA here on the channel is again, I don't want to toot my own horn, but straight up, it's nothing less than spectacular. We have been nailing, and I'm talking nailing it, okay? There probably are other people on YouTube like me, but maybe they're just not getting the attention. But also, if they are doing this and providing this exact same value, they should be getting the attention. So I really do think I'm not the only one who's calling the shots, but I do think I am, I'm probably the only person who's calling intraday price action. Like, not intraday, I'm calling it, but I'm releasing a video each day before market close, and then we also have the written updates. And holy crap, have we been nailing the intraday price action, like that, along with these swing moves. But like, yeah, guys, if you guys want to have your mind blown, just go check out the written updates and just literally go look back. All right, go look back on the written updates and then see where the market went after these projections. Specifically, if you want, you could look at the weekly updates. That's when I sum up the whole week. So then do that and then look at where we went that week. All right, I'm pretty sure I nailed last week. But yeah, guys, let's get into it. All right, so you did have inclining volume off that hangman candlestick. The bullish, the tested performance here is bullish continuation, whereas the theoretical performance is bearish continuation on the patternsight.com, which is just a site that has tested a crap ton of stuff. All right, it was created by Thomas Bulkowski. He is who I learned a great deal of my TA from his books and on the patternsight.com. But yeah, you have your CCI hinge up, your stochastic is hinged up, your RSI is hinged up. Going over to QQQ, you have the same exact thing, except you are down here in you're hinging off of the buy line here on your CCI. All right, now something I was pointing out is that you have this wick. All right, you had these, I pointed out in the last week report, you have these wicks that are showing, hey, buying pressure is stepping in. Something I know for a fact I started calling out on this candlestick right here is you literally were falling, and then you can actually see it. I think it's better on QQ. I think you made the lower low. Yeah, so it started right here. You literally had declining volume here. All right, you fell off of declining volume. That was something to note, saying that hey, when that happens, it's just showing that the move isn't being supported or it's fizzling out. Which, like, Like, say you have on the daily time frame, say we can actually point to one. I know exactly where to point to one. This bad boy right here. All right, this bad boy right here is exactly what shows you what happens when you have, was it on SPY? Was it on SPY? What was it? Yeah, SPY. Declining volume. 3 days of massive gains right there. Massive gains, but declining volume. All right, you ran from that close in 3 days. You ran, that's $12 up right there off of all declining volume. So what does that show you? Some guy is pulling the strings behind the scenes. And obviously not just some guy. There's probably a lot of people out there, a lot of big money, and like, you know, like I'm not saying they all collude together, but like typically, all right, people are going to follow the charts, and the big money probably just figured out what I got going on here. Maybe they haven't. Maybe this will blow big money's mind, and I'll be invited to a big bank or something. I have no idea. But that's ultimately the purpose of me putting these out on YouTube. I want everybody to see my skill set is like vastly just improving over the span of these past few months. And it's only going to it's going to continue going up. All right. And with that comes a lot of freaking money. All right. That comes a very large amount of money. And I think that is literally a shortcut to get into a bank, pretty much having banks reach out to me. I don't know. I'm just showing my proof of concept. So in the future, like I could pretty much have anything I want to do. This is pretty much how I plan on doing that. All right. Whether that means I want to go travel for my 20s, I want to just say I want to go travel the world, or do I want to go work at a bank, or do I want to, I don't know. All right. Do I want to become a financial advisor? Not really. But like if I want to, I'm sure like this is exactly what would show someone, hey, this guy is actually crazy, and he's got what it takes. All right, we should get him all aboard. Like me, Kevin, I'm pretty sure he probably could have just reached out to a bank or something, and they gladly would have taken him along. And instead of like be a financial advisor, to get the qualifications to advise someone on options. All right, options in particular. You could do all the other stuff relatively easily, but options. You need to go work at a big bank. They need to be a part of, I forgot what it's called, but they need to be a part of, we'll just call it the big banking circle. All right. And these are the big banks like JP Morgan, Goldman Sachs, and all these other ones. All right. And you don't get to ask for this test. All right. To get the qualifications you need to go beyond your own financial advisor that can advise on options and bonds. Actually, no, I think it's just options, but either way, options and derivatives and futures contracts and all that jazz, all the stuff we know is what makes people an absolute crap ton of money here on the channel. Everything else is really the slow game, in my personal opinion. All right. And it doesn't have to be, all right. Like people are at different times of their life, but I'm going to be straight up. I'm trying to, that's the skill set here on the channel. I'm trying to master options trading pretty much. All right. And, honestly, I'm doing that pretty well at just like normal calls and puts. Wait until there's a short and a long side of that put, and we're doing spreads here on the channel, and then our risk is just vastly decreased. But for now, we're going to keep doing this because I've been killing it doing this, and I think you guys have also been killing it doing that. But yeah, all right. So this is what I'm doing here on the channel. If I ever do want to open up that avenue, that's the point of this channel. All right. Also, obviously, I'm trying to I've been in the market for 1.5 to 2 years now. And I got wrecked. All right. I remember like even on this uptrend. All right. I probably started entering index funds somewhere over here and just rode this up for a couple months. And then still in this span, I was still getting wrecked on options because I didn't know how to do things, but I knew I was addicted to options. I was like, holy crap. I just saw a lot of short-term money there. Holy crap. But holy crap, guys, after learning what we have in this bear market, you don't think this is going to be extremely easy to trade? You don't think this is going to be extremely easy to trade? No, I'll tell you for a fact it's going to be extremely easy to trade. And we get rich in the bear market, we get wealthy in the bull market. That's my saying. All right. And honestly, that's what I stand by. I put my money where my mouth is. And if you just follow along with the channel, you'll see like, holy crap. Yeah, this guy would be crazy to not put his money where his mouth is. All right. But all right. So let's get into the technical analysis. I know we started off with a weekly time frame. We already went over SPY QQ. We have DIA now. That ended up having an upward resolution to this little bear flag we had forming there. I told you guys on my written update on Webull on Thursday that, hey guys, you had like a breakdown here on DIA. That ended up happening. But since SPY is still in its consolidation pattern, I decided to not really pay too much attention to it. And look at that. It was a false breakdown. Even though it was on incoming volume, false breakdown, all right? IWM over on the weekly time frame. You do again have a hangman candlestick with the test performance being and off the inclining volume test performance is bullish continuation. And guys, this doesn't mean you have to end the week out above that. Okay, all it means is you have to go above next week. All right, you have that continuation, and then you can reverse in the same week. And personally, I think that's exactly what we're going to get. I think that CPI report is either going to create a big fat bearish engulfing candle, or it's going to create a very big doji candlestick because we are going to be rising. You're going to go like that, and yeah, I don't know. I personally don't know. Or it creates an inverted hammer, all right, because we're going to start here. We're going to go up. We're most likely going to be going up going into that CPI report. We're going to cover two possibilities that can happen going into that CPI report and coming out of it. But one scenario there is highly likely compared to the other one. So that's what I got my money on. And yeah. All right. So now that we went over that, let's go over Mr. VIX. So you have a bearish engulfing candlestick on the weekly time frame. All right, stochastics are crossed down. RSI is crossed down. CCI is hinged flat. All right, VIX is getting ready to move. Now, we didn't end up coming all the way back down to form a triple bullish divergence here on the RSI, but I still do think, and I kept this on here because I still want to see if this trend line holds here. I think it is going to hold, and it's going to be pretty cool because this is just another aspect of TA that, like, hey, we're testing it out, and it's going to be there after. So we're going to know, hey, RSI respects trend lines. All right, and if you break a trend line on RSI, it probably also means something that you're going lower on VIX. Probably the same exact thing on this. Oh, actually, we can just draw that trend line. We'll have this on here just because it likely does at least have some bounce at that trend line. We can actually put a price target on it, but we're not going to do so. We're just going to leave it on there. But yeah, on the daily time frame, you also have the bearish engulfing candle that goes with the weekly time frame. But keep in mind what I just said about the weekly time frame. I treat the monthly time frame like the same thing. Like we have a monthly bearish engulfing candlestick. All right, I'm going to point this out right here. All right, so you went lower, you closed out green. All right, you closed out and formed this doji candlestick right here. So even though you had the bearish engulfing candlestick that suggested you were going to be going lower, just like this one too, you end up wicking back up. But specifically this bad boy right here, you had this bearish engulfing candlestick on the monthly time frame. You went lower and you closed green. All right, that's something that I heavily think can happen. All right, you had the same thing right here. All right, now you actually did not go lower there. Then you went over here. You went lower than the close of that candlestick, and then you came back up. All right. So yeah, it doesn't mean we have to end the month out lower. I personally do think we're going to end the month out lower because I think it's going to take some time to get into this zone. I don't know when but I do think probably early February. That's why I'm in my Feb third puts, because I do think by end of January or early Feb, I think we have some sort of catalyst that'll probably be kicked off with the CPI report. Or some sort of narrative that will probably be kicked off with the catalyst that is the CPI report. That ends up bringing us all the way back down to at least somewhere in this range before we have that second counter trend move. Because as you see, we have these counter trend moves. You had that one, you had that one, you had this one. All right, but I would say this was probably wave 1, wave 2, wave 3, wave 4, wave 5. All right, we have this, which I think it's going to come up here. We're going to go like that. All right, maybe you come back down here because look at where you bounced on this one right here. You literally came out and slashed these lows, all right, and then bounced off those and then went and broke the lows again. All right, so this is personally what I think is going to be taking place. All right, this exact scenario right here, that is what I think we have queuing up here. All right, and yeah, all right, I do think there's so much freaking money to be made here. Specifically, if you get to enter... You get to enter here. Those Feb 3rd 380s are going to be going for like 350. And by lows, they're going to be going for 3,000. There is your like 8x right there, 7 to 8x right there. That's sexy, guys. That is like everything anybody could really want. All right. Like it's a lot of freaking money to be made is all I'm getting at. All right. 10,000 turns into 70K. 1,000 turns into 7K. All right. 100K turns into 700K. I know there was a whale in the audience here now. This... Props to you for being a whale. I'm going to be up there with you, bud. 100%. I will be there over the next 2 years. I will 100% be using... I'll be trading like you. With that position size in there. With I did the math out on that trade. Yo, if you weren't to hold all those to low, holy $1.8 million. I know you're not going to do that because it's a lot of freaking money sitting there, but pretty cool, dude. Pretty cool. That is going to be me as well. All right, so let's go over the daily technical setup we got going on here. You have your CCI hinged up. Stochastic. Now, this is actually my tell for, I think we are going to be having, we're going to start the day going down. All right, I think this D right here, I think that's a D. No, it's K. All right, this is stochastic K. The K line got very extended in comparison to D. All right, and when that typically happens, I have seen you either consolidate or you end up having a little like a down day, like something like this. You rallied and then you had that down day right there, and then look, you got super overextended here, and then it came right back down. All right, I don't know if that is going to be the case. This is just a little thing I've noticed just along the way. Hey, when that K gets too far extended to D, typically it'll correct itself. All right, so I think that is going to be the case. So we have the same exact thing happening on DIA. QQ does not have that thing, but still, look at that, it's still going. All right, and holy shit, that looks so sexy, guys. So sexy. Amazing. All right, amazing. Your boy did end up managing to double down on that the call side of the strangle towards lows there, and then we also got to I saw the non-farm payroll news. I was like, no way the market's gonna sell this thing off. So I saw the dip we got the other day, and I literally started loading the boat right around the bottom. It was probably right in the middle here. Right around 380, 381 maybe. But yeah, guys, you see how that played out, guys. This is I will say that was the first time I experienced, like, hey, you wait for a catalyst, like the directional catalyst to take place, and then if the market starts acting irrationally, then you take advantage of that irrational behavior from the market, and that's what's taking place. It was like, holy crap, that's actually that's a reason to rally. That's literally the catalyst that the technicals have been suggesting is going to break us out of this consolidation pennant we got going on here on SPY, which we're on here for 2 weeks. So I do think we are going to continue this move up. But I think the 4-hour and 1-hour time frames are showing us exactly what is going to be taking place going into next week. And it doesn't have to take place that way. All right. Risk management is, and maybe people think this isn't risk management. I don't care. Okay. I know for a fact we're not going to come back up and break highs. All right. Well, I mean, maybe on DIA, I have no idea. DIA is only like 4% down from highs. So like there is the chance. All right. But I still don't think you're going to, but maybe you come closer to it than SPY did. But all in all, guys, yeah, I don't. There's not a single scenario where you stay up here in this range for over a few days. All right, it's if you get one shot up, it's going to be like this. All right, it's going to be like this where you fade it out. All right, and we're going to go over that too. All right, but yeah, my personal risk and pain tolerance is built into this exact trade plan, so I'm here for it. All right, so worst case scenario, we do end up just going up here and fizzling out before even getting that slight pullback there, and I don't get to take profits on any of the puts I bought at 390 here. I bought all my puts from 380, pretty much 387 all the way to 389. So that was my entry on this put. So if we end up getting that fall back down to 385, like I'm thinking, or around there at least, yeah, that's going to be a decent little chunk of change. All right, but I ended up doing it because what if we just, what if we die? Right? I literally remember being down here and not crapping my pants or anything, but I was just pissed. I was just like, crap, man. This thing's about to take off and go back to the downside. And because I'm trying to practice patience here as a trader, I can't freaking load the boat. I was pissed. I was furious. All right, not furious because it would have just been whatever. But yeah, dude, that's like that's a crappy feeling. You're like, oh, dude, I'm gonna make so much freaking money, and now I'm like, oh, the boat's leaving without me. Crap. Luckily, I didn't end up foaming. I took 1/3 of my desired put position. It turned out that no, I'm in more puts than that was. But yeah, I had 20 Feb 3rd 380s, and I bought them for 725 down there. So, I mean, they were down on that, but no, I have so many puts now. So I got the average down on there. So I think my average is in the 5s now. So it is going to be really pretty is what I'm getting at. Maybe it's not in the 5s. Maybe it's probably high 5s. I forgot. All right, I forgot. But either way, guys, yeah. If you end up coming back up here to gap fill, this is where I go super heavy in. Not super heavy, all right, but I'm going to put 10K on Jan 20 puts, and I'm going to be riding that bad boy down. And any pain that I do suffer, let's say I have to suffer 20K of pain by the time we get up here, maybe even 30K. 10K by the time we get back down 380 should turn into 30K on the Jan 20 puts, and then boom, pain taken care of, pain was worth it. That's my thinking here, all right? I'm not missing out, all right? And I think I'm playing this pretty nicely here, all right? Going along with my TA. All right, so for the daily time frame, yeah, you broke out of this consolidation pattern with inclining volume here. CCI is hinged up. Everything momentum is hinged up, all right? You got the power. All right? You also got that catalyst that is it's gonna make the bulls, all right, the perma bulls, I should say, pretty much be like, oh, I told you, suckers. I told you, bears. I told you. You're stupid, all right? But no, the bears aren't stupid. The bears are logical, all right? And I'm not saying just only bears, all right? All of these, now I'm going to be honest, yeah, you got to realize, like, hey, this isn't the end. Like, it could be the end, but, like, at the end of the day, we got to connect the dots here with the technical thesis and the fundamental thesis, and we got to acknowledge, like, holy crap, no, the Fed is telling us we physically have to go lower, and that's what they're telling us here. We physically have to go lower. That's what they just told us not too long ago. All right. I don't know if you guys remember that right up here. The Fed told us, like, hey, all right. And also, what just came out in the minutes, all right? What literally just came out in the minutes is I'm paraphrasing here, but they told us that, hey, all right, we can't have a market rally take place because that risks us getting all of our progress taken away from us for inflation. And that was the biggest risk they expressed, or their biggest concern they expressed throughout those minutes, all right, was the market can't rally. And it's what I've been talking to you guys about for months here, saying that the rally is not in the Fed's best interest, all right? We can't break the trend line and come back up here because, all right, the wealth effect is going to come back and people are going to think they have a lot of money. And then, you know, they will technically have more money, but then they're going to spend a crap ton more. They're going to cause this inflation problem to come back in full effect. And then, boom, we're going to have another this. And, yeah, that's not what the Fed wants. I'm not saying they care about the market, but I'm saying the inflation problem, they need to, that's like one of two jobs there, unemployment and inflation, all right? They got to keep those tame, and it's not tame right now, all right? It's not tame at all, and they're literally forcing a recession to deal with it. And, yeah, recession has to come, guys. In a recession, if I'm not mistaken, deflation occurs in a recession. All right, so if we have people calling for a recession 2023, doesn't that mean inflation will by default be going down? I don't know. Okay, I don't know. We'll talk about that as we go on. But yeah, all right. So getting back in the technical analysis, QQ has pretty much the same exact setup. You came up here and rallied right back up to this. What is this level I have here? Was this an old gap fill? I feel like yeah, it was the old gap fill all the way up here, and you literally like stopped right around that. Like that is pretty cool. That's why I keep the gaps on the chart. But yeah, you're coming right back up to that trend line, and I don't know if you end up breaking that trend line and coming back into it instead of just back testing here. I still would look at it as a back test, and I think personally, all right, when we do come up here on QQ, I think it's a high chance, all right, high chance that we end up having a wick through it, and then we have a body that stops at this trend line, all right? It doesn't have to happen, but it would make sense to me if that were to happen with what we got going on SPY and SPX. All right, DIA, and all of these happen on inclining volume. But again, you had the catalyst that told the bulls, hey, you have a reason to rally. All right, you have like finally a reason for the technicals to play out. All right, so not a reason to rally, but a reason for the technical thesis to start playing out. All right, and that's what I've been calling out here. And yeah, maybe I look dumb doing it, but guys, I knew like we had so many freaking momentum factors suggesting, hey, you need a counter trend, so then sellers have more money to like, or have more, pretty much like they were out of gas down here. That's what all of our momentum indicators were showing us. They were out of gas. And if we are going to have the impulsive move that I think is coming down, all right, we are clearly going to need some more gas. All right, so that's going to need short sellers to have more time to load back up to push this bad boy down. All right, and that was just like all in all, that was the main part of it. And you had to put the call ratio spiking, and like, I remember there was someone like saying that doesn't matter. Yes, of course it matters. It's literally showing you that the volume on the puts to calls. And if it's spiking to historic levels, it just means like, hey, put volume is crazy. Now, I also went over in one of my videos how that like doesn't have to mean that. It could mean like, hey, crazy options expiry and people are just exercising all of their puts. But you weren't seeing this crazy shove down that would have came with that. So I don't know. But either way, you had the fuel. I kept telling you guys, you had the fuel, like you had the technical thesis for it. You had the technical setup. Now you had the fuel behind it, the short squeeze setup. And I told you guys, like, when I'm saying these things, I'm never certain about them. All right. I told you guys I don't have a crystal ball or anything. But I give you guys the probable scenario. And that's really all I do here on this channel. I read the charts. Now, I am trying to, so you guys don't lose like I did for a year and a half or whatever it was. All right. Like, I'm talking straight lose. That's who these videos are. Like, obviously, if you got a lot of big money and you see proof of concept in my video, yo, tag along, dude. Tag along. All right. I know there's some whales out there. But all in all, I'm trying to educate here on the channel for these newbies out there and show these guys, you don't have to lose. All right. I'm not the most experienced, but I know how to not lose at this point in the market, and I know how to win big. All right. And in my opinion, it's in a relatively safe manner. Right. The only thing I'm calling out here on this channel is my swing trades. All right. And yeah, if you guys do want the trade alerts, they are over on Twitter. They're free until 1/1/24. So if you want, take advantage of them, guys. The whole idea behind that is I will be selling them. They're going to be $100 a month. All right, just because, like, guys, I provide an absolute crap ton of value. I don't get paid for any of this, but damn right, I'm building up something that I'm going to get paid for. But I'll tell you right now, my whole thesis is like, hey, let me make the people that will be buying it, I'm going to put the money in their pocket. I'm going to put a lot more money in their pocket to the point where, holy crap, it's undeniable value. You'd be very stupid not to pay the $100 and just keep growing your money. Like, that's the whole idea here, is like, I'm not just trying to be a sleazy guy and take money from people. I am trying to create a decent ass income so I can go travel the world. But yeah, all in all, guys, like, straight up, I'm trying to put the money in your pocket first before even, like, for a very long time, might I add. That's a whole year. And I've been doing that for months here with you guys on the channel. So I know there's been a lot of you guys who have made an absolute crap ton of money off of me already. All right. So $100 really, it's not too much. If someone has 10,000 to play with, that is so minuscule. If someone has 1,000 to play with, I'm still considering that is so minuscule. All right. If you have $1,000 with my trade alerts, and again, all right, not a financial advisor or anything like that. These are my trades. But yeah, if you have $1,000 and you are doing what I'm doing with it, dude, $100, holy crap, that equals like a lot of money each month. Minimum 2K a month, very safely. All right. But max, like, dude, that can equal 10K a month. I don't know. It's starting with only $1,000. I'm just saying, I've seen it happen for myself and with one of my friends. He's experiencing it right now. But yeah, guys, that's the whole idea here. That is really the whole idea. I'm just trying to make people a ton of money, but I'm also trying to make it so people learn while making money instead of learning like I did and losing money, because that was terrible. And it brings you to a low place, guys. You think like you're worthless. You think like, oh crap, I failed. I'm a failure. All right. And I'm just letting you guys know, if you are in the market and you are repeatedly losing, just realize you still have a drive. All right. The fact that you keep getting up, that shows you have a drive. And it shows that, like, as long as you don't leave, all right, as long as you don't quit the market and you keep getting back up and you keep treating all these failures and these pains as lessons, all right, then you will eventually do exactly what I did. Everybody goes through the same exact experience in the market, all right? Some people take shortcuts because they have mentors, just like I did, all right? I paid for so many freaking courses, probably over 10 courses, just on trading alone, all right? And it's because I acknowledge, hey, these guys are older than me, all right? And, like, I'm going to be honest, a vast majority of my technical analysis does come from the patternsite.com and Thomas Bulkowski's book. That was by far, I think that was by far the, just the best, like, overall, like, hey, this is how you, like, from a beginner standpoint, this is how you stop losing money. This is how technical, like, it pretty much opened my eye to TA. It blew my mind. I started seeing stuff, all right? So, but now, guys, I'm gonna surpass Thomas Bulkowski. I can almost promise you that one. All right, so let's get back into TA. I know it's a 33-minute video. I get that. All right, it is the weekly report. I told you guys at the beginning of the video, it is going to be a longer video. All right. But yeah, all right, guys, the daily time frame does the only thing that's suggesting you do end up coming down is the stochastic I called out on my Twitter. And that's why I end up exiting my calls. All right, exit them at the gap fill. All right, or no, not at the gap fill. It was at the trendline resistance. But also, I was entering the vast majority down here. It was pretty sexy. But yeah, guys, if you do want the Twitter, it's over there. It's over there. And the written updates, I'm serious, they are an absolute game changer for myself personally. Being able not only to reference them, but also being able to write them. It, like, gives me a very clear mind about what is happening. It lays everything each night out. Like, it benefits me greatly. So I guarantee it's benefiting other people. So go get them. They're on Facebook. They're on Webull. Trader Henry J is the name. There you go. Or Trader Henry, whichever one. Facebook, I'm Trader Henry. Webull, I'm Trader Henry. Twitter, I'm Trader Henry J. Here, I'm Trader Henry J. You know, people took the Trader Henry. All right, so getting back into it, you got a bullish thesis. That's what I'm getting on the daily time frame. You're bullish. All right, you're bullish. All right, now on the 4-hour time frame, here is where I think things are going to be playing out. All right, so on SPY, you do have your 4-hour CCI in overbought territory. You have the same thing on QQ. You have the same thing on DIA. Massively on DIA, might add. It does look like you are probably going to do the same thing I'm going to call out here on SPX. IWM, same exact thing. So all indices are in agreement with each other. Let's see what Bitcoin's doing. Oh, look at that. Look at that. All right, Bitcoin's doing the same exact thing. All right, except Bitcoin is open much longer than these guys are. It's open on weekends. And after hours when they aren't. But what I want you guys to look at is what we got going on right here. All right, your CCI is at 240, at 241, 242. So we can make that 241. All right, and then we are going to look back on the chart and see all the times that it has reached this during this bear market. And I say during this bear market because who cares about this euphoric bull thing? All right, this bull squeeze we had going on from COVID. All right, just realize this bear market trades nothing like that. And anybody who thinks you can reference technicals from over here, letting you know you're going to repeatedly lose because the market did not trade the same. The sentiment was not the same. And over here, you had unlimited QE announced, and that's what reversed the markets. Over here, hell nah, they have QT going on. The exact opposite. Technicals will prevail in the bear market, all right? Back over here, bull market, guys, it's going to be easy. This is why we get rich in the bear market, we get wealthy in the bull market, because the bull market, we just ride it out, all right? You just buy when things are oversold on your RSI on the daily time frame, and it's usually a solid freaking entry, all right? A solid, like, except for this crash, right? But that's what I'm saying. It's starting here, right? You could have gotten the pullback right here. You literally, guys, this is exactly what I'm talking about, right? This is the crash. You didn't know. Look at your RSI. It was staying down there, right? But look at over here. You got down in towards overbought territory. You formed a triple bullish divergence here. That was a big signal there. And then you end up bouncing massively. That was a, let's just see percent-wise. What was that move? Massive move, 11%, and then you end up falling back down here, all right? And again, in the bull market, I'm not going to be too confident short and stuff like that. We're going to be going with the trend. But look at this. It's the same exact thing. You had the bullish divergence going on here on the RSI right when it hit 30 over here. Look at that. Look at this move, right? Again, and that's what I'm saying. And on these things, since it does like to just stay up here during the bull market because QE, all right, you can literally just buy shares and hold them, all right? Or you buy dated options, all right? You can, I'm saying you get to ride it out, not what we do here in the bear market where you have to take a crap ton of risk management into consideration because in a week or two, you can wipe out all the gains you just made because that's really how it works. But yeah, guys, the only time you reached up here in this bear market on SPX's CCI, 4-hour CCI, is back over here. All right, and this is exactly what I'm going to be referencing. This is exactly what I think is going to be taking place. It doesn't, well, not exactly, but it's going to be something very similar to this. And we're going to pair this up with SPY and these percentages here. And we are going to be, we're going to be seeing how perfect of a picture this would be and how sexy of like, holy clear as day opportunity here. All right. All right. So you have this right here. So you reach a high here. This was on Thursday, August 11th. All right, and the next day, you ended up coming back down, and you fell 1.3% down to lows. All right, from there, you then have your CCI hinge back up, and you had it hinge up from these lows. All right, went up there, but we're gonna take it from the high because that's what we got right now. We don't know what the low is. We're gonna take it from the high. All right, back here to form this bullish divergence, you went up another 1.6% there. All right, 1.6%. You touched that trend line right there. We're gonna see what we got going on over here. All right, because this is kind of crazy, all right? And this could be a wick down, and then we close the day like somewhere over here, so we flip it, all right? We broke out of SPX's pennant right here, and then we flip it, all right? Now, remember what I just told you guys about 1.6%, all right? Because it is pretty crazy. It is pretty nuts. Because this is very similar to the only other time this happened in this bear market, which I think is exactly what's about to be happening. I told you guys, short squeeze potential is here. Everything is here. Bullish technical setup was here. All right. I was just waiting. I thought I was going to miss out, but hey, patience was rewarded. All right. Technicals will prevail in the bear market. Again, bull market's probably going to be a little different, but we're not going to have to worry about that for a very long time. I hope this thing lasts for 2 to 3 years. I really freaking do. All right, we're going to, so much freaking money. But look at this, guys, 1.5% from this high up to our gap fill. All right. And this is personally where I think we are going to be reversing off. If you come over here to the 4-hour time frame on SPY, and guess what? From this high we hit, now you come over, and that was actually, it would be on here because SPX doesn't trade after hours. So screw this 4-hour candlestick. It's going to be right here. All right. From right here, you would be going down 1.3%, and then you would be coming back up, and you probably close the day out around here, and it would act as a flipping of this pennant. Or again, I don't know where this thing really should be drawn. It could honestly be drawn right here because this is the bodies. All right, and then the picture is even better. All right, now you got to come down 1% to end the day out over here, or you don't end the day out and you end up. What I personally think is going to happen is we fall into the 11 a.m. I think it's at 11 a.m. The inflation expectations, either 11 a.m. or it is 1 p.m. I think it's 11 a.m. though. All right, so you would fall in pre-market. You would probably gap down. You would be falling in, yeah, you're falling into that event, and then maybe you know, come back into the pennant, but then you wick back up, and then you end up having that, and you end up doing something like that. And this is what I was saying. Hey, technicals really are pretty freaking perfect here. If I don't say so much, if I do say so myself. All right, you're like, yeah, it's a little over what you had back then, but I'm gonna be entering this. Probably a dollar, not probably, I'm definitely entering a dollar. If we see 394.50, I'm pulling the trigger. I know that's a little more than a dollar. I'm pulling the trigger though on this Jan 20. Probably going to be close to the money because I want them to trade like shares, but they're going to be cheaper. So they're still going to be out the money because I don't want to waste the fact that I'm playing a shorter expiration. I want them to be cheaper. So I'm probably like, if we do get that entry, I'm probably going to enter like maybe 390s, maybe 385s for Jan 20. And by the time we come back down to here, I expect those would be probably a 3x gain right there, 200% gain, maybe 150, 200%, but more, definitely way more than the Feb third puts. I'll tell you that right now. You got 1/3 less time on them. But yeah, guys, that is what I see playing out. All right, we could go over the 1-hour time frame now, and the 1-hour time frame does, and this again, it aligns with exactly what I just said. All right, all bearish divergence shows us is, hey, the volume, all right, the buying and selling pressure on the CCI, at least, it's showing us that the buying and selling pressure does not support the current move. All right, so someone is manipulating the price, which means right when they stop manipulating the price, you're going to get the expected move, the actual, not the expected move, but the move that would have happened if someone wasn't controlling the price. All right, so I do think we're going to see the 1 hour. You're coming through your sell line right here. I do think we're going to come down here, and I think we are going to. We're probably going to come back down here to around 385. And boom, you flip. You literally flip. And yes, this is a level where reactions happen. And this is why I was saying I don't know where the trend line really would be, where it's being respected. Is it this level because you had these reactions here, and then you had this reaction right here, and then you flipped it? I don't know. Or it could be. It literally could be. It could be that, and that was our false breakup because now you have, again, you have so many freaking reactions at this level, all right? So many, all right? You have this false breakout right here. You have these, like, 4 freaking wicks right there. This, you didn't get close to it, but, like, then you flipped it over here. So it's one or the other, but perfectly, like, if technicals were to perfectly play out, I think it's going to, I think this is the trend line that's going to be respected. I think that was our false breakout here. And I think we're going to come back down to 385. And then we are going to, I do think we're going to squeeze back up here. All right. Now, on the written update, I gave 2 scenarios. And that was one. All right. And then the other one is that we rally into CPI. All right. And well, either way, I think we do, like the 2 CPI scenarios is we fall into CPI. All right. Which is why I added my puts there, all right, why I took the full position, because I'm going to be able to take profits. I'm going to cut half of the puts if I get what I just described, right? If we do get the drop going into the morning of Monday, all right, into those inflation expectations, then those, I do believe those will cause us to rally because of what one of the Fed speakers said the other day, all right, the biggest hawk. He's, you know, I'm not going to say he's going full dove mode, all right, but he's saying like, hey, all right, it's on the table now. The soft landing is on the table. I don't think he said he sees signs of inflation coming down, but he's probably saying the soft landing thing because We have 2 CPI reports coming back down. We just had the non-farm payrolls come in like weaker, right? Maybe it wasn't the 200,000 number, still hot by 23K jobs, but it was still the lowest number we've had in years, all right? So that is exactly what the Fed wants to see. That's the second report, I believe, that is coming back down to a low that we haven't seen in like 10 years or so, all right? And yeah, guys, it would be the perfect storm. Everything with the catalyst there would align with the technicals if we do end up falling into that event. And then we rally off that event going into CPI, and then boom, we dump off CPI. All right, so let's go into it. All right, and guess what? Okay, if we do not rally into CPI, here is the scenario, guys. Here's the scenario. If we don't rally going into CPI, we come back down and we rally off of CPI and we gap up. Okay, that is what I am expecting. Okay, if we fall, and that's why I took my full put position right here. I fully accept the risk. If you come back up here from there, from the entry right here, if you come up here, you're going down 30 to 40% from where the calls are, or from where the puts are. The Feb 3rd 380 puts are at right where they were right there. All right, that's just how it's going to be. All right, or no, from where they are right here, you're going to be losing. From here, you're losing about 25%. If I was looking at that math right. But either way, I do think you have a very solid chance at stalling out here. And if it's not here, it's going to be where JP Morgan, they know things, all right? They are the biggest bank, where they shorted calls to pay for their spread, all right? And I know it's just to fund the spread, but they still shorted the calls. And I don't think they're going to be doing something that's going to be going against them. I think they picked that 403 mark. Not only because it covers the cost of the spread, but I don't think they see it going above. All right. And they probably have enough influence to, have influence over the Fed. All right. So make the Fed come out and say something. They are the biggest bank. They're going to be the people that, like, hey, if they're freaking out, the Fed has to freak out. All right. So, yeah, that's what I see happening. I think we're going to stall out in this range right here this week. And then we're going to fall into CPI. That's my likely scenario. All right. But let's go over scenario number 2. All right. Here we go. We're going to cover this on SPY. All right. We're going to cover it on SPY. We can go over on the, we'll use the 4-hour time frame just because we can go with the oscillators here. I do love the CCI, especially on the 4-hour time frame. It's been one of my biggest successful, I guess, indicators here. I guess this is an indicator. It's been amazing. Nothing less than amazing, this 4-hour CCI. It's been so, combined with the stochastic has been amazing. All right. I'm going to say it again. All right, so here's the case. We either do exactly what I just said, go like that, come back up here, and we reverse. This is CPI. We reverse on the 12th on CPI. We can actually put a big red mark. Put it on the daily time frame and see where it goes, though. Right here, the 12th, it would be Thursday. All right, let's redraw that now that we have that. Right there. All right, nope, that's Wednesday 11. Come on, one, no, too far. There we go. All right. So here is scenario number 1. All right. We fall, back test that trend line. All right. Or we don't back test the trend line, but either way, we fall. All right. And we don't have to fall. We don't have to fall. All right. This scenario number 1 kind of actually has 2 possible outcomes for scenario number 1. But either way, just know that scenario number 1 is we rally into CPI and we fall on with CPI. All right, so now we rally up to CPI. I think we somehow get up here, all right, or at least close to that because it's going to act as a price magnet. But yeah, you have one hell of an explosive rally. And then I think you absolutely tank. I absolutely think if you rally into that, you tank. The charts are suggesting you tank on that, guys. Just like I just said, JP Morgan knows things. Well, guess what? All right, the charts predict the news because the people who pretty much make the charts do what they do, all right, the algos and the people behind the algos, those are the people who have figured it out. Those are the people who know things. All right. Those are the people who, all right, that's why the charts predict the news. They set up the charts to predict the news so the charts can have room to do what they need to do. That's at least how I look at it. But yeah, scenario number 1 is either that and then you fall on that, or it's you fizzle on up here and you start getting one heck of a bearish divergence forming on here. And on the hourly time frame, you just and the reason I think you are going to be having that fall we just talked about is yes, what we saw on SPX's 4-hour time frame, 4-hour CCI all the way back up there, wherever it was. But you also have this down here, and you have let's actually just get rid of all these sloppy lines for you. Come over here, the hourly time frame. You have that bullish divergence, which shows hey, it's the selling pressure stepping in, buying pressure is fizzling out. All right, and yeah, you can stay up here, and we would probably form like a triple or quadruple bearish divergence and stay up here because look, you have to get all the way up here. Like this is so like imagine if we just did this. I don't see us just staying up here. I think we're probably going to have more volatility. We're probably going to have dealers, you know, shaking out the they're probably going to shake out calls. They're probably going to shake out puts. All right. That's just how it's going to happen. All right. But you're probably going to go after the calls first with that drop. And then dealers are going to go after the puts with that. And they're going to scare everybody. But guess what, guys? This move up is also going to be fueled by puts. And it's going to be fueling a further move up because shorts are going to be getting scared out of their positions. All right. I guarantee there's going to be some retail crowd that's getting scared out of their short position up here. They're like, oh, we're going to break the trend line. No, you're not going to break the trend line, all right? That's why you have the radar that we call our oscillators. Our momentum oscillators are our radar. All right, so that was scenario number 1. Scenario number 2, and this is why I did what I did as well, because I'm going to have the opportunity to take 50% gains. And like, hey, then if we fall into CPI, I also have a chance to take more gains. So that's going to be really cool. All right, this actually, in my opinion, is best case scenario. I just don't think this is going to be how it plays out. But it would be pretty cool because you'd have plenty of time to, with the positions I entered, you'd have plenty of time to take profits on those before CPI and re-enter because CPI would likely be doing exactly what it did up here with this crazy gap up, and then we faded out all day. And that's what I did back then. I put out an alert, guys, I'm going all in short right before open. I don't think I said all in short, but yeah, like that's so when I say all in short, I mean like, hey, my desired put position, you're in that like all in on the put position. It doesn't have to be all of your account, but you know, your desired put position is not just going to be half. It's not going to be 1/3. It's going to be all of it. All right. 3 out of 3. All right. 2 out of 2. All right. But yeah, this is it. You fall. I don't know how this would go. Maybe you go there and you back test that. Actually, what line is this? I don't know what line that is. I don't know why I thought that was a gap. It's definitely not a gap down here at 381. We are going to be cutting that out. Because, yeah, well, I have it on the chart. But, yeah, scenario number 2, which I think is very unlikely, is that we fall into this bad boy, all right? We, like, literally fall in here and maybe form a bullish divergence or something, and then we get the gap up, and that brings the oscillators all the way back up into extremes like we had with CPI over here. All right, look, you went all the way from down here because the charts set this up to all the way up here on this one candlestick. And then look, we faded it out. All right. That is what I think is going to be taking place. And then look at that. It's the same exact thing. You set up with this, you're set up here. Look at this. You're all the way down in oversold territory. You could have fallen, but it's not going to be that impulsive move to the downside. So that's why I think that first scenario is going to be playing out. But yeah, all in all, you fall into that and then you rally on that / like gap up. I think it would be coming in the form of a gap up. I don't think it would be a rally intraday. But you gap up, then that's where I go in all in short again. And then boom, we get to write it down. All right, so guys, that is pretty much it. All right, now let's talk about Riot, okay? And I hope you guys are making a lot of money. And by the way, I'm just going to comment on what I called out on Apple. What I was saying, guys, and look back on the video if you really want to. I know they're longer videos, so you don't have to. But I'll remind you what I was saying. Saying, hey, guys, all right, you hit 30 on Apple's RSI. This is where you bounce. You typically have been bouncing when you get under 35 on Apple's RSI. And then guess what? We also went down for another and formed the bullish divergence. All right, you formed the bullish divergence on that, and you formed on Tesla, which you had you have a triple now on Tesla. Look at that. So Tesla, guys, and this is why I say we're probably going to continue this rally. All right, we're probably going to see Tesla probably perform a little bit here, and we're probably going to see it squeeze harder than the other things. Then we're going to see it come back down. All right, and then it's probably going to form a normal bullish divergence there. All right, guys, so Riot, okay, Riot and Mara. So we're going to be talking about that, and it's nothing to do with the chart. All right, it's everything to do with what we got going on right here, and this is just kind of just depressing. All right, this sucks. But I'm still going to be playing Mara because I think Mara is going to heavily outperform Riot on that squeeze because Riot is not nearly as shorted as Mara. All right, Mara is, if you look up on FinViz, I don't pay for, I think it's, yeah, Ortex. I don't pay for it. I'm not going to pay $80 a month. I don't care about short squeeze. That is what I'm getting at. I don't care. All right, people who are going to chase these short squeezes, I'm telling you right now, I played that game. I tried learning that game. Maybe it is sustainable eventually. Maybe after years and years of losing, someone's going to figure that one out. But I'm gonna be honest, all right? It's not like you can spot all these patterns. It's like, okay, you need social media attention on this thing that has high short interest, and that's your recipe for a short squeeze right there. Without the attention, you never get short squeeze. So it's not like you have a technical, it's not a systematic approach to making money. And I like a system. I like being able to actually build up a skill set instead of just gambling. All right. So if you are doing that, I'm not trying to offend anyone. I'm just saying right now, I've done it and it's not sustainable. All right. You might have some big ass winners. All right. But then the next one will wipe you out, or at least wipe out a lot of that. All right. So starting with Mara. All right. Mara over here has a, we're just going to look right here at their, we can literally just look at this. All right. Total debt. All right. Total liabilities, 850 million. All right. Total liabilities, 800 freaking 50 million. All right. That sucks. All right. Total current liabilities. Yeah, it's only 45, but we're looking at this long-term debt right there, 780. All right. And this is what I really like about Riot. And that's why I will 100% be going with Riot on this one. I'm probably going to do like a 60 to 40 split between the two. Because I do think Mara is going to outperform it, technically speaking, but I think Riot is going to prevail. And right now, Riot actually does have a higher hash rate than Mara. But by the end of 2023, Mara will have if they stick to their plan that they just put out in their investor presentation. I went over that, and then I went over both of their December, I think it was December 7th, Bitcoin production, like, you know, their reviews, or crap, I'm brain farting right now. I forgot the word for it. But either way, I went over both their stuff, and Riot has the better situation now. And like fundamentally speaking, it's like a way better situation now. So that's what I'm going to be. I'm not risking a Silvergate thing happening, but also keep in mind, guys, Mara and Riot are not lenders. They're not banks. They may, like, Mara literally apparently just paid off their Silvergate Silvergate. I think it was either 30 or 50 million dollars worth of revolving credit. All right. But I just don't like the fact that Mara has so much debt. All right. And then doesn't have enough money, cash right here, to cover that debt if they really need to cover it right now. All right. And this isn't Bitcoin right here on cash only. All right. This is not Bitcoin at all. This I would say total current assets. I think this might include their Bitcoin. All right. But their total assets here, this does not include what they got in cash. All right. So I don't trust it, is what I'm getting at. Okay. And the liabilities is total liabilities 850 mil. All right. And then they literally have nothing to pay for that. They would not. I'm just saying it's not fundamentally strong. All right. And you come over, but again, Mara is my baby, and I think Mara is going to squeeze. I really do. I think it's going to heavily outperform Riot. But you come over here to Riot. All right. Cash only, 354 freaking mil. Even if that went down, guess what, guys? Their liabilities, their total liabilities, not even current liabilities, 150 mil. They can literally pay off everything right now in cash. They don't have a chance of going under, is what I'm getting at. Okay, the whole Silvergate thing, I guess that happened from, it was a bank run pretty much on Silvergate. Everybody kept wanted a bunch of their stuff back, and they were forced to sell a bunch of bonds for losses or something like that. And that pretty much was a self-fulfilling prophecy to tank everything they had. All right, they had to sell every asset they had for losses. All right, so that, or maybe it's not everyone, but like the vast majority of them, I'm pretty sure. But that's like why Silvergate went under, and that's why I don't think Mara and Riot will ever have that problem. All right, and keep in mind, Mara will most likely prevail here. Mara will survive, all right? Will have the higher hash rate, I believe, by the end of 2023, if they're sticking to what they had in their presentation versus Riot's presentation, all right? Investor relation presentation, whatever it's called. Just go look on their website. You can find it. But yeah, guys, Riot, we're going to go over the technicals real quick, but Riot will be what I put most of my money in. And around the time when I'm going to be watching Mara. So if Mara gets to 250, I am going to likely be buying that, but also buying more of Riot. It's going to be like a 60 to 40 split, between 60% in Riot and 40% over here in Mara, because I don't want to risk having 50% of my money go down overnight. All right. I just don't want that to happen. I plan on going very heavy into these two. All right. So I just don't want that possibility. All right. I will be taking profits on Mara relatively quick, because it's going to happen very quick. Right. This was the short squeeze. This is the last one. And this was on Riot. All right. And keep in mind, this is literally what I'm getting at. You went from $4 on Riot to $10. All right, that is 160% gain there. You come over to Mara, you got a 250% gain there because you went from the same, all right, or not the same, but a dollar higher. So at $5, you went all the way up here to freaking 20 bucks. All right, 20 freaking bucks, or just about 19 bucks there. And look at that, that's a 270% gain. Way outperforming Riot's gains there. All right, and I do think that's because of the short interest held on Mara compared to Riot, and now I see why. All right, I wish I looked at it sooner. All right, but I will say the whole reason I've loved Mara is because throughout 2022 they were supposed to heavily increase their hash rate. Actually, judging off of their investor relations there, I don't think they stuck to their plan on increasing their hash rate to what I remember them saying. I feel like they were saying it was going to be 9 to 12 exahash, and now it's not. Their current exahash is like 4 or 5. What the heck, Mara? What the heck? All right, whereas Riot's is like, I think Riot's is at like 11 right now. But by the end of 2023, I think Mara's in their investor presentation there, they were saying by last quarter of 2023 that they will be at, I think it was 23 exahash, which that is significantly more than I believe I just saw in Riot. So, but either way, I'll be playing both. This is my reasoning behind it. All right, we don't really have to go into too much else because, yeah, all right, Riot doesn't have the risk of going under. Like, literally, in my opinion, no risk. All right, no risk there. And then they also have more Bitcoin on their, like, way more Bitcoin on their balance sheet than Mara. So everything about Riot is fundamentally sound. Mara is not. Mara is just, technically speaking, it's going to be probably ripping faces. All right, and that's my attraction to it. All right, guys, so with that being said, I will catch you guys in the next video. Have a lovely week, and peace.